the Christmas themed music as we get closer to Christmas. Can you believe it? Anyway, morning everyone, and thank you so much for joining us for another Connect and Share on a Friday morning, number 76 of our whole series. And firstly, may I pay my respects to all the lands of which we attend today and the Aboriginal ancestors, both past, present, and also the emerging leaders, which we enjoy working with them to help interpret the lands in which we work every day. So let's jump into the week in review. Some great stuff, some not so great stuff. But let's start with the negative, get it out of the way, and hopefully we'll have some better news on the horizon soon. But certainly camps advocacy has not stopped, and it continues to do as much as we can do to get people to realise the advantages of our camps and what we need to get back to our activities. So you remember we're on Channel 9 for 2 nights running. We've had an article in the Sydney Morning Herald on the 16th, and we're continuing to meet with the likes of media and members, and trying to get that advocacy more wider, and certainly get some movement, get support basically for our camps. This Thursday, actually you'll see that later in the presentation, but we do have the skills workshop or exhibition with the federal government this week. So hopefully we'll start looking at how we recruit back for when we can get back to work in that. ACT Tourism, there's the marketing grants are now open again. So I ask all our ACT partners to let me know if you're interested in being part of that activity again. We ran this last year. It was a promotion to get people to consider tourism in the outdoors in the ACT and make it complement, you know, what is existingly known in the ACT, which is the main key attractions, but knowing that the outdoors is a significant opportunity for Canberra. So if you're interested in that, please let us know. The other interesting thing that came out from the ACT this week is they've got the New Year's Eve event happening, and they actually are engaging all businesses in exhibiting and promoting what they do at that event. So that opportunity is free. And I urge any of our operators to try to get involved in that, again, to spread the word about what we have in Canberra in the outdoors. Take 3 for the Sea have an event coming up. Unfortunately, I'm going to be at the Sport and Rec IRC meeting on this day, but if anyone wants to be part of this, I certainly encourage it. I attended the one last year up in the Central Coast region, but it's a CEO cleanup, and basically you get in and help protect the environment by picking up some rubbish within the Rose Bay area. It's a lot of fun, but also you're contributing to environment sustainability at the same time. This is the national job fair that I was just talking about. We have been lucky to be accepted into this job fair, which is this Thursday, and we are promoting all the jobs that we have on offer in the outdoors. Needless to say, and this is a frightening statistic, but we've estimated that we need 10,000 jobs to get back to capacity in New South Wales alone. Very frightening statistic, a lot of work ahead of all of us to get them into the jobs, but also educated at the same time. So we'll have a virtual stand at the jobs fair and trying to connect our opportunities with people looking for career change or jobs. The Skills IQ Sport and Rec Forum, you heard from Sarah last week, and this is on the 3rd of December in Parramatta, and she urges every one of you, if you want to be part of that roundtable discussion on the issues regarding sport and rec in the skills area, to come along and email her, and she will give you all the details. If you can't attend in person, she is opening it up to a virtual attendance as well. So don't feel you have to make the trek to Parramatta if you can't, and you still want to be involved, reach out to Sarah and she can connect you. International students are back. This is a great start for what we need, certainly from looking at fulfilling our workforce, but also they are no longer having to quarantine. So great news from the New South Wales State Government on that, and hopefully we can start getting some more people. Whoops, went backwards, sorry about that. We do have a template for a vaccination policy in case anyone wishes to look at that for their own business. Reach out, all members have access to that. So if you're looking to have a vaccination policy, drop us an email and we'll certainly send it to you. Lots of grants, as we've said. The nature of bushfires and COVID means that there's a lot of money out there to do lots of different things. The latest tourism grants are beyond what I spoke about last week, and we now have a new grant that was announced, which is a new experience grant. So this is if you want to build or create a new tourism experience, there is some more grant funds available for exactly that. So I urge you to have a look. Remember that we can supply letters of support. We can also help you with the articulation of the criteria for your submission. So again, reach out. Masterclass 2022. So those that attended Masterclass 21 know we had a bit of fun, and also we learnt stuff at the same time. 22 will be no different and actually double the fun because it's 2 days instead of 1 day. So if you are interested in that, please keep in mind that we'll be putting out expressions of interest to attend that probably very early into the new year. It will be only open to a small amount of members, and it is at no cost to members. So we want to make sure that as many members that want to take that up get in as quickly as possible. So keep an eye out in your newsletters for that offer. And don't forget all the resources that are on our website. We covered off a few of those last week, but there's more and more being added to our website every day, every week. So if there's not something there that you're looking for, please let us know because we'd love to add it. If you're looking for it, needless to say, there's probably other members that are also looking for it. And don't forget the YouTube channel. So all of these sessions, as you know, are being recorded and put up onto our YouTube channel. You can look at the last 75 episodes of our Connect and Shares on our YouTube channel. And there's also our playlist where we're actually consolidating some really good videos that might be relevant to our industry and putting them into playlists so that you can review and navigate instead of doing the old search and finding things that are across the other side of the world and not relevant to you. So it makes it a little bit easier to find some things. Next week's Connect and Share is all about money. It's actually Destination New South Wales will be coming along to talk more about their grants. We're also hoping that Office of Sport may be here. If they are releasing their grants next week, they'll be here to talk about those as well. And that's those active recreation grants that we've been speaking about. Insurance. So, look, I think the precursor to this session, and thank you again so much to Paul and Greg for being here today, but thank you for your commitment to our industry as well. Thank you for putting up with my phone calls and the industry's phone calls, because needless to say, this is certainly growing, but it's certainly no surprise. And I'm sure Paul and Greg will talk to that. For those that didn't see the current affair episode, I thought I'd quickly just play it. It's only a couple of minutes long because it really gives a bit of a flavour for a very similar aspect to what we're experiencing. So if you can just bear with me.
It could be the end of amusement parks as we know them. Operators say they're being taken for a ride, forced to close over insurance hikes they simply can't afford.
The Royal Easter Show's in doubt, and it could be the end of the jumping castle.
I would be out of business.
When someone wants to do a school fete, you may not be able to get rides anymore.
We need a solution and we need it today.
Insurance hikes are pricing amusement rides and their operators out of the market.
As COVID hit, we had 4 insurers in the market.
Today, just one insurer remains, Aviva from the UK. It's not APRA approved. APRA is the independent authority that supervises insurance. Damien de John runs Melbourne company Action Events. He's been in the business for 30 years and says the past 18 months have been his hardest.
Now we're looking how we can restart again, but we run into the insurance crisis, which has gripped our whole industry at this point in time.
Insurers have jumped ship, moving into lower risk markets. Insurance premiums are now up by more than 200%, leaving operators like Damien in a state of despair.
You've got millions of dollars worth of rides sitting in paddocks, rusting away. We still got to keep up the maintenance. We still got to keep up the engineers' checks. We still got to be compliant to the regulators. That all costs money, but with no income, it's making it extremely hard.
The insurance sector goes in cycles. When it's softening, prices are more attractive and better cover is available. Right now, premiums are up, exclusions are expanded, and in some cases, insurers are simply saying no.
This car park is normally full of rides during the Sydney Royal Easter Show. If we don't find a solution to this insurance crisis, this car park could be empty.
This year, 5 rides were excluded from the big event. Unless there's a change in insurance criteria, 80% of rides will disappear next year. Shane McGrath is Operations Manager at Sydney's Royal Easter Show and President of the Australian Amusement, Leisure and Recreation Association.
Australia operates around 600 agricultural shows throughout Australia. They're going to be compromised. The Christmas carnivals up and down the east coast of Australia, they're also compromised. Amusement rides and attractions and events are part of the Australian community.
Let's not forget, it's $1.3 billion of economic activity and 7,000 jobs.
Bruce Bilson is Small Business and Family Enterprise Ombudsman. He says he has a solution.
And we think a discretionary mutual fund, a kind of insurance, is probably the most fit-for-purpose solution that can be, I think, suitable for the industry and provide a durable, sustainable level of cover and protection, not just for the operators, but also for people that are participating in these activities.
Discretionary cover is an insurance-like product which gives the discretionary mutual fund the choice of paying a claim.
Is there a part of you that is concerned you might have to shut up shop in a few months?
Absolutely. It's a very real threat to what we've created and what we've held on to over COVID.
You've come so far and now it could come crashing down.
Absolutely.
An ex-owner of Bouncerama, a mobile jumping castle and kids party hire business in Sydney. Anique knows she'll struggle to renew her insurance policy in May 2022.
Obviously with equipment like jumping castles, they are full of air, so the risk of injury if something was to go awry with wind or if children were knocking into each other, there's obviously that high risk there, and I feel like insurers no longer wish to take that on.
Anique's fearing the worst.
I would not operate if I didn't have insurance.
How much money, time, effort has gone into building your business?
We've invested everything we could into this business to have something to celebrate joy with, and if that wasn't a possibility moving forward, we'd be left with nothing.
And we keep kids active. We get them off their computers. We get them off their phones. We get them into society. We bring the smiles to the kids' faces.
The show must go on.
Yeah, shame, wouldn't it? The Insurance Council told us it's working with the amusement park industry to find a solution. You can read their full statement on our homepage.
So, a bit of a flavour. Oops, oh no, I don't have it on mute. I just thought I had it on mute. Yeah, a bit of a flavour for what we're going to be talking about. But yeah, look, I'm going to hand over to Paul and Greg to sort of explain to us where we're at right now, and we'll go through some of your questions and answers. So if you want to put anything in the chat, I'll monitor that as we go. So Paul, I'm going to hand over to yourself.
Thanks, Laurie, and thanks everybody for having us along again this morning. That article does produce a really good segue into what needs to be a robust conversation, and I think we could all sit and talk about the problems that our sector of the industry faces, being the outdoors adventure, leisure sort of market. But I just think there's a couple of points that just really jumped out at me when I listened to that article. I started working, I've been involved in camps, camping and outdoors most of my life, and I started working in the insurance industry around 2002, 2004, being involved with crisis management and the IX I was drawn into. And the first program that I was asked to look into was the ALARA accreditation scheme. Back in 2002, the amusement industry was faced with what would say an even worse version of what they're facing today. And from what I'm hearing, that literally those takes could have been taken that whole article could have been replayed back in 2002. They decided to wind back the ALAR accreditation because a few insurers got involved in the game. And I'll get Greg to talk in a minute about some of the various income streams from insurers and how they fund themselves. But he's turned around and saying at this point in time premiums have jumped 200%. The question that I asked back then, and I'll ask again today, 200% on, are we saying that premiums are too high now, or are we saying that premiums were too low last year previously? Insurers are businesses, and anyone who's spoken to me would have heard me saying that the cost is not the largest issue with especially in public liability insurance. The critical component is availability. Because as that lady said, even in the article, without insurance, she's not prepared to run her business. And I can definitely relate to that. At the same token, he's got assets rusting away in a paddock, that he wants the insurers to have complete faith in when they put people on. I think the Dreamworld incident can tell us how volatile the amusement part of the industry is. A lot of people have aligned the outdoor education, outdoor recreation industry with the amusement industry. I personally, whilst there's some synergy, I think we do things very, very differently and run a very different industry. And so me personally, I would caution necessarily a close alignment there. And I'm not criticising one or the other. I just think that there are completely different agendas for each of the different industries. And so that's something that you guys need to robustly talk around. But I guess, they've talked about the problems and they expect someone else to find the solution. That's what I got out of that article. That's what I got out of that particular thing. And that's what I get out of a lot of the conversations that they have. They want somebody else to come up with the solution. For us, again, for those who have talked to us over the years, and this is not something that's come suddenly. I know that for at least 5 years, we've been talking about this in various aspects of the industry, and at least the last 2 to 3 years, specifically in the people that are in on this call. And I think that the industry has actually done well in pivoting the conversation from insurance to risk management. I didn't hear that in that article at all. It is what I think our industry is talking about. How can we improve? I guess that there are a few things that we can discuss this morning that sort of then can bring us all onto the same page, because we need to bring insurers along with us to understand what we do, how we do it, to give them that reassurance that they can provide us the assurance we need for the financial support and backing that we're asking of them. Insurance is an investment. Most people see it as a grudge buy. Most people say as, oh, I've got to pay this. Majority of people, the only communication they have with the insurer is via their broker, and that's legislated here in Australia for a number of reasons. But the most times what they do is, here's your invoice, have you paid it? And that's not a partnership. That's not a relationship. I don't know how well you understand the insurance industry, but I can tell you very few people in the insurance industry understand what you do. And for this partnership to work, it's really critical that it works in both ways. Now, we've got to be really careful, and I just want to point out, and Liz, I'm going to leave most of that to you, but we're not on this call as a marketing expedition. Both Greg, myself, and most of the people that work in this office are involved in the outdoor industry in some form, either as a user or it's been our career, our lifestyle, and our lifetime. In my case, that's why I'm here. And each of us have an involvement in the industry outside of our day jobs, and oftentimes those lines are blurred. we need to find, the industry needs to find our own solution. We don't need insurers telling us how to run our activities, but we also need to understand what risks they are undertaking and what we are asking of them. And I think we'll try to explain that in a couple of ways. But I thought what I'd first of all do is I'll ask Greg just to give us a bit of an understanding of how the insurance market actually works and how insurers actually work, because I think we've got a bit of a misunderstanding that they're here to prop us up.
Thanks, Paul. I've just put together this little bit of a slide because there's a few moving factors here with insurers. A lot of us just think it's money in, money out for the insurers. They get some premium in and then they pay some money out in claims. And if it balances out, it works out quite nicely for everyone involved. But there's a few other things because they understand that there are market pressures involved there. There's a competitive market. Other insurers may want business. So premiums can often get driven down. And in the past, what we've seen is we're actually paying out more claims for the insurers than we're getting in premiums. Now, in over the last 15, 20 years, investment returns have been pretty good for insurers. They've been stronger interest rates, market returns. Insurers are required to go and invest their money for their premiums in the markets, and then they can get a return. So they theoretically could get $1.2 million out of that $1 million worth of premiums and cover all of their losses. But now what we're seeing is with the investment returns reducing, they're having an increased focus on underwriting profits. So they're directly having to make an income on the premium coming in and the claims. What insurers also do is take a portion of the premiums they receive from businesses and reinsure them. They understand they're going to have a working loss, and these are sort of the incremental claims that come along throughout the year. They're our trip and fall, someone trips over a stick when they're bushwalking. But they pass on the bigger risks, being someone falls off a cliff whilst bushwalking and ends up with a permanent disability. And that might be they reinsure every claim over $2 million. But those large claims go into what we call reinsurance pools, not specifically just for public liability. They might go into the property reinsurance, which gets affected then by the cyclones, by bushfires. They go into event cancellation reinsurance pools as well, which has been affected by COVID. And then we also know all the public liabilities issues that we're having. So the costs down the chain for the insurers are increasing too. And the other cost that has increased, especially after the Hayne Royal Commission, is the insurers' expense ratios. I know for a lot of the meetings we've been in with the insurers and even our internal regulatory controls here, we're probably spending one and a half days a week just looking at compliance costs around this. And this is really having a big drive on the insurers' profitability. So now what they're doing is having a really close look at the risks that they're insuring and seeing if they can make a profit from those individual activities. We're seeing a bit of stabilisation in what we call vanilla risks, well-managed risks. So they're sort of like your cafes, your coffee shops, your carpenters, things that have good regulatory controls. The health industry is a really good one, where we see like physios and allied health. They have strong regulatory controls in place, licensing boards and accountability systems. Those risks are becoming a lot easier to insure, but we're still seeing a lot of stresses in property in high-risk areas such as cyclone and bushfire and flood-prone areas, and then in the high-risk activities. And that's where we're seeing everything come to a head currently.
Thanks, Greg. And I think hopefully that gives you a bit of a picture of to what the insurers are going through. Greg made mention also too, there are various classes of insurance that come under different stresses and different aspects of it. If you're north of a certain parallel, property insurance is very, very difficult to get. Fire is a major contributor to Flood, obviously, we've just recently undergone those. These things Australia are very, very vulnerable to. So it's not just the one class of insurance that is contributing to the hikes, because insurers are having to balance costs right across there. To give you a bit of a picture, just to put it into, Greg, I'll ask you to put up a slide on the sustainable capacity of the various insurers. This slide gives you just a bit of a picture of, if you were to look at, a premium pool. If we have one insurer locking things down, say over $5 million premium pool, then a typical, say, in the occurrence of a death, I think we could look. Genuinely, that's going to cost a very vanilla type death, and please don't take that the wrong way. But when you're looking from an insurance perspective, it's going to cost the insurer between $2 and $3 million at best. So if you have 5 insurers all just picking up a premium pool of $1 million, any one of those insurers will fold under that one catastrophic loss. Whereas if one insurer was to provide that have that capacity, then that can balance and can actually handle that loss, given all of the other income factors that go again. I guess I want to jump out of the problem mode and look at the solution mode. And then we can go into having more of a focused conversation as to what you want to talk at. But if we go on to the next one, Greg, the next slide that's there, I think what we've got to understand is the issues that are facing insurers who are working in this space. We've just put up together, this is as we've talked through with insurers, and we've been working with insurers on this particular problem for just on 12 months, specifically on a solution on this. And the issues that we had to address were right here on the screen. There are a lot of internal disconnects with insurers as far as what underwriters are expecting versus what claims teams are expecting to how things going. There has been a failure to address profitability in here, because oftentimes there's a big gap between the various syndicates that produce insurance. So by the time claims filter through, they're saying, oh, wow, we're losing money, bang, it's gone, which is why, Brendan, your comment earlier about 1 minute I have an insurer and even halfway through it, they've withdrawn. Volatility is a word that has not been addressed within the insurance industry, and our market, especially in the outdoor adventure and leisure market, is very volatile. Things can go very well, but we can then have one quick thing happen, one slip up, one accident, and it's going to have a large impact on things. The normal day-to-day slip and trip and type claims, they can address, but in this instance, we have a lot of young people involved. If something goes wrong, it goes very wrong. So the volatility of this particular area, that cat loss that Greg was talking about, must be addressed by the insurers, and they've not done that. So this is partly their fault, and they've got to recognise that. And the other thing is that there's a whole lot of restrictions that have been put in place in certain coverages, because again, the insurers have been dictating to people what has gone on rather than what's there. So Greg will move through to the next slide, which sort of talks a little bit about why insurers aren't swimming in profits, and the claims inflation actually is really having that impact. And Greg, I'll get you to talk briefly about these 4 things. This is actually now what's happening to them, which Greg's touched on some of them, but just to give you a really clear picture as to how it works.
Yeah, so claims inflation is probably a quick and easy one to knock off right off the bat. So we all have probably had to deal with lawyers at some point in our life for positive or negative reasons, and those costs are going up. In the property sector, they're seeing 3 to 5% increases in rebuilding costs across the board. A number that I got from our chief broking officer yesterday was in WA, that's actually increased to 17%. So if the insurer's expenses on claims are going up by 17% in the state, you would expect just there those same costs to go up. But we're also seeing, as part of the claims inflation, incidents that wouldn't have occurred in a claim previously are now occurring, and people are wanting more, and the courts are awarding more as well, because they are seeing that there is an onus on the businesses to ensure people are safe, and if someone is injured, they're rewarding them more. In the public liability space, especially having a looking at the new and emerging risks, incidents and claims occurring that frankly no one ever foresee coming. And the scariest ones in that place are not the incidents that have been risk managed, that have been identified in the risk assessments, that have strong controls in place. They're the ones that have been assessed, are believed to be controlled, and they're still occurring. Incidents where there are strong staff training and induction processes in place and the staff don't follow the operating procedures, where there are maintenance and inspection regimes in place and the business is not completing those inspection and maintenance regimes. And those are the things that are really scaring the insurers. And we all have seen we've all seen the news or been in bushfire, cyclone and flood affected areas, so we know that those are occurring. And the regulatory pressures, which I spoke about earlier, that the insurers are having to spend a lot more money on legal fees, adjusting products, but also being dictated to in what coverage they can and can't provide to people and to have a profitable business solution.
So, and I think Greg's talked about the other areas, the regulatory pressures and the expense ratios. He spoke about that. So we jump out of the slides. Let's just drop out of the slides for a while now. And I guess now we understand a little bit about, I hope that explains a little bit about what's happening in the insurer side of things. What's happening on our side of things? What is happening on our industry? What are we doing about the issues that we're facing and how we're controlling it? Do we need an industry solution is a question I ask, and I think hopefully we'd get everybody who's on this call to nod and say, yes, we do. We need to provide an industry solution. We don't need insurers. They need to be a part of the solution, but we need to actually come up with a solution ourselves. We've just talked about how is that going to be achieved? And we've been working very closely with industry. I know Liz has been a part of the conversations. Laurie, you and your team have been a part of the conversations, as has been in the various states, where we've been talking about, is there something from an accreditation process that we can actually get that would be robust enough for the insurers to have faith in? Because the question we've got to ask is, can we self-manage this at a business level? I think we've already proven that the answer is no, because businesses all have various, responses and doing. You'll be fascinated to know that we're one of the only people that actually have incorporated the AAS as part of our underwriting guidelines. When we start talking to businesses, and we talk to thousands of businesses each year, when we start talking to businesses, you'd be surprised at how few of these businesses have ever even heard of the AAS. And that is a real concern. So it demonstrates that we as an industry have got a real communication issue there. We've got to make sure that people embody this. But I guess this is why we're saying, okay, rather than the insurers start to dictate a solution, we've got a very narrow window right now to actually say, okay, here's what we do. Because many of the businesses that we come across on a regular basis, we do the investigation, we dig into them, and they don't comply with the regulations. So we need you to come up with a robust accreditation process that actually can demonstrate you can manage this inside the industry. That's going to give more credibility than I can come up with a program that can then in turn be a solution. I think there was a comment just in the chat there, I saw it briefly, that it's a voluntary thing. yes, that is part of the problem. But what happens is the courts will look and say, in absence of something robust, they're going to say these are the standards industry have put, and that is what they use. That's what WorkSafe use in the absence of any other legislation that's in place. So whilst they are voluntary, they are what is going to help determine an outcome. And so you will be measured against those AAS in the instance. And look, there's a whole lot of other things that I can add into it, but I think probably now is the time to flick it back to you so that we can respond directly to what you want to talk about. But I hope that you can understand that what we're trying to do is actually get industry to step up. We have been working, as I said, with Leslie, the accreditation models, guidance, each of the various states, and we've been negotiating with insurers to try to come up with a long-term solution. We can come up with band-aid solutions, and our industry is faced with that all the time. We struggle with that business model. What we're trying to do is actually come up with a long-term solution, which means we've got to come up with a viable, sustainable program that will suit the industry. And then it's a question of whether you guys want to engage it or not. So that's the type of direction we've been working on. And as I said, we've been working on it for 12 months. Unfortunately, COVID has camouflaged this issue for much of our industry. And I think that this is why it's coming to a head all of a sudden now. But it's not a recent thing.
Yeah. And Paul, sorry, Dave, I'll just quickly say where we've come from in the last 6 months. So for those that are not aware, we had the Outdoor Council of Australia called a summit, where we got a whole heap of people together to discuss all the issues. Needless to say, this was brought up in the summit. Accreditation was brought up in the summit. And in looking at where we needed to focus our energies, 3 groups were formed. And one of those groups is the accreditation group, which has strongly got several different challenges, insurance being one, incorporated in that working group. They've now been working since June, I think it was, Liz, somewhere around there, and to now, and have come up with what is probably the bare bones of a solid accreditation system that we need to see in our industry. And when I say our industry, probably across the leisure and outdoor education industry. So it's not just about one different silo of the industry. This is a broad opportunity that we can all leverage. The process from here is trying to then articulate that and work out the case or build the business case around that and how it can be implemented. So needless to say, a lot of work has been done, a lot of good work has been done. We do see this as an option. However, as Paul said, it's a long-term opportunity. It's not going to happen overnight, but certainly, and I applaud your words there, Paul, on this is about risk management. It's not about insurance, and we need to sort of start changing our vocabulary around that. Sorry, David, you had a question?
Possibly. Hi, good morning, everybody, and possibly more of a comment. I was in the AEE conference over last weekend. They had a virtual conference with 550 delegates. And one of the sessions I went into was all about accreditation through AEE. They've had a program running for about 25 years. I'll put the link in the chat in a second. And I'm not a supporter, I'm not fully bought into it, but they saw and recognized if the sector or the industry doesn't provide an accreditation process, and it's organizational wide, so it could apply to tourism operators, camp centers, and where I work, an outdoor education program within a school, I believe. And it's getting picked up and having traction in Australia already because there's a void right now. OEG has already gone ahead and made that commitment and is accredited, the first organisation in Australia to do it. And Higher Ground, and there's another company, I believe, who are looking at it or are actually applicants in that process already out of Queensland. There might be more. So it seems like there's a void that's been filled by an American model, which is great and fine because it's got lots of good PhD people behind it. But maybe we need to get the national summit people to start talking more to the community about what's going on if the community's moving forward because the process is too slow.
Yep, no, great comments. I think the challenge we've got in this country, and I'm sure we've sort of bounced around this, is that the AAAS is a voluntary offer at the moment. And as Bridie said, we lobbied national parks to get it embedded into their eco pass, but there's still no mechanism for checking. You know, it's a tick box. It says, yes, do you comply by the AAAS? And the same has happened with ATIC. And ATIC is a great, you know, it has served a purpose over the years. We worked with Australian Camps Association to get AAAS recognised in that accreditation program. It is still not being checked. So even though, yes, they've gone through the process of saying you must have AAAS and show us your papers, the expertise in-house right now is not there to be able to say, yes, you're compliant with the AAAS. So, you know, that's the big missing piece right now. And to Paul's point before, the AAAS is a framework in which we can use, but it's just not legislated, or it's not in a position that we have to just yet.
And I think Laurie, you raised just such a key point there. Until people have to do it and receive pressures from multiple angles, they will choose not to, whether it's they don't believe in it, they don't have the money for it, or they don't know about it. Because you can sort of forgive someone if they haven't been aware, and you can educate and work through that. But I was in an industry presentation last year in the leisure industry, and this really scared me about the things that was going on, because someone used this as an example of, and this is sort of the moral, ethical and failings and dilemmas that we're working through at the moment, is that a business received a quote where there was a standard in place. They said, well, we're actually not at that standard right now, but we don't have the money to retrofit our equipment, update our procedures, retrain our staff to actually meet that standard. So they went back to their broker and said, well, can you see if you can get us a quote without the condition that we need to comply to the Australian standard? The broker actually went back to the insurer and asked, and then the insurer actually provided a quote that said, we're not going to have the condition anymore. Yes, it costs more. Yes, it's got a higher excess. And the business went, well, it's actually cheaper for us to pay more for insurance and not comply with the standards. So we're just going to do that. And these are the things that are occurring. And I watched the video recording of this situation again yesterday. And these things are occurring. So until we have pressures from multiple angles, we're going to see these situations keep occurring.
I also think David raised a good point that there are, you know, whatever the models are out there, the question is twofold, though, that we've got to, we as an industry have got to determine whatever that is going to be, have some control of what that's going to be, and then be able to pitch that to the insurer and say, this is the boundaries we want you to work in, for the very reasons that Greg just outlined. We have this all the time where people will come to us and say, oh, no, we can get a cheaper model without the same compliance issues. They come to us the next 12 months and we say, well, you have to meet those compliance issues before we can help you. Because now our major focus is looking after the people who are on board. We've got to look after our clients first. For example, this year, the last half of this year, we've come to a situation, and I will share it with you, that we've not been able to place new business into our portfolio because all of our resources have gone into looking after our existing clients. And that's just the call from the insurer, which we then have to back. So I think, David, there are accreditation models out there. The industry has to choose what's going to, I guess I'm trying to say is the industry needs to choose what the accreditation model is, and then pitch that to say this addresses these issues. And again, that's why the risk management focus, I think, is critical in how we do it.
And I think this is where the insurers are starting to look, is not just at the micro level, but at the industry and the macro level. They know that they can underwrite individual risks on a robust basis. They can go in there, read every single risk assessment, operating procedures, audit your staff, but they also understand that that's not a viable thing once you start looking at thousands of businesses. And they're looking towards industry to go, well, how are you protecting us? What industry controls are in place to ensure the sustainability and viability of this, and that there aren't the poor operators being slipped into the portfolios, which actually then undo it for everyone. Because for a sustainable insurance portfolio, you need thousands of good quality businesses to make it work.
If I can, I'm familiar with the AEE accreditation, and the reality is it might be okay for some organisations that have got the resources to pay for the 2 accreditors to come across from the US to pay for their accommodation and to organise that they can be on site, on program for up to a week if it's a large organisation. And that's not a sustainable solution for our sector where it sits right now. As it needs to be more geographically attractive, and people need to realise, I think, and I think Greg just mentioned something really important there. You put together an accreditation system that includes both, let's call it a desk audit, and an on-site review of activities as they're happening to check that what you say you do is actually what you walk and talk in the industry. Those are 2 really key components. And that's one of the debts of the AEE that's really good. Now, their focus is on environmental or experiential education. It might not necessarily be on the focus that will actually placate the insurance companies and provide an open door for that. So you either spend money on getting your organisation accredited, so the insurers go, yep, okay, we can find a good price for your insurance, or you go, I'm not going to bother with that and I'm going to pay more money on my insurance. But as a sector, we actually want people operating at a standard where there aren't a lot of fatalities, there aren't a lot of major near misses or incidents that are costing, that then push up that price of the actual insurances. Now, this has been done before in Australia with the fitness industry. And, you know, the fitness instructors have to be accredited. So they're talking about individuals being accredited versus what the accreditation scheme is currently proposing. It would be the organisation takes responsibility, because that mirrors what the essence of what's been written in the Adventure Activity Standards and the Good Practice Guide is, that the organisation makes sure that they meet all of the key requirements to put somebody on the ground as safely as they can. So what we also need to be prepared for as a sector is to say that it's going to cost money to make this happen. You won't be able to just get an accreditation for the current accreditation price of $800 or $900, or if you're new, $1,200, for somebody to say, oh, you say you meet the Adventure Activity Standards, great, you do. And I think it's the broader concept is also that working group is talking about, is to say to work with those key land managers and those sorts of people as well. So you're not duplicating effort. So Bridie, when you apply for your New South Wales licence and you say, yes, we're Adventure Activity Standards compliant, that if you're accredited, then National Parks doesn't have to go through all of your paperwork as deeply as they do. And I know that happens because I live with a compliance operator for OEG, and she manages all the licenses in New South Wales. So I know they don't just go, oh, okay, yeah, you've got your accreditation. No, you actually have to show us all of those different procedures for all of the different venues that you're operating in. So the duplication is there. So that's another win-win. If you have to operate in a licensed environment, that an endorsed accreditation scheme by key land managers, state governments, the Department of Education, leads to a whole lot of other benefits beyond just the insurance. But the underlying factor is that we get more operators that are actually open enough to have somebody come in and accredit what they're doing, give them professional feedback to continue to improve their practice. And that's the benefit of an accreditation scheme, as well as all of the side steps, is that we actually we improve the practice of our industry because they're willing to have an external auditor come in and look.
There's another advantage to that too, which is reputational. And it's something that I think, for those that are a Connect and Share regular, you've heard me say it once, if not 10 times, about our lack of reputation as an industry, and getting it to a point that we recognise for not only our outcomes, but our activity. And, that's a degree that you don't sort of push that in an accreditation system, but it's certainly an outcome. So, needless to say, there's been some recent deaths which have not been pleasant for anyone involved, that have probably not been either operators or social groups. It's trying to identify that you're safer in an environment, and that accreditation means something for your activity in participating in that. So I think, there's lots of different opportunities behind what we're trying to do. And I encourage anyone that's really interested in this to certainly get involved in that discussion. And hopefully soon we'll have something to share with the industry and get really good comment on to make it exactly what we need it to be.
Two things, Laurie. I think I'd really like to pick up on what David's comment was in the chat, which is excellent to point out that, really what should our intention be? And I love the fact we often forget that. It should be about benchmarking ourselves and seeing that we, what areas can we improve on? What areas can we do? The accreditation typically is a proactive process. I know that anyone who's had Liz come and assess their place in say, the NATA environment, have come away from the experience so much better off, because they've received support, guidance, some feedback, some wisdom, and being benchmarked. So I think that is really critical. And I think equally so, we need to go back to our old school of understanding what insurance is there to deliver, rather than it being the primary, let's save our butts. It is actually about if and when something goes wrong, that we have the capacity to make it somewhat, to try to make it right. If we do hurt something, if we do damage something, that we have the capacity to actually try to rectify the situation. Not holistically, we can't do that with money, but it is what causes a lot of people's stress, and that's how it goes. And I guess I'll just leave you with this one question. Greg raised it earlier. What would you prefer us to be doing? Would you prefer us to be working on a long-term sustainable solution for an industry? Or would you rather that we focus on one of you and get one of you a solution? And then you can choose which one it's going to be.
Well, you've really upset that. There's cricket.
But it is genuinely the question that we're faced with all the time. And Greg's constantly saying, oh, look, just can you help me? And you're in a situation right now. It's going to take us another couple of months to finish. This has been a 12-month process, but we have got, we've done this in the equine sector once already, and that was done. It's now been running for 15 or 16 years, and there's people who have been with the one insurer for that entire time, not the one broker, the one insurer. There's a significant difference. What we're looking at right now is trying to come up with a partner that will be prepared to work with industry and with a long-term view in mind. There will be commercial decisions people have to make. People will come and go. That happens wherever it is. We can accept that. We have no problem with that. People make a business decision all the time. What we've done is make it a business decision of how we're going to go along doing it. And that's not the purpose of today, but I think it is critical that people actually want that, because if they don't want that, we need to know. And then we can start going, can we find a non-APRA approved insurer that will take your money and give you a certificate? Yes. But will we sell you that? No, because it won't actually meet the criteria that you genuinely need insurance for, because it's not about the piece of paper that says, oh, I can do this. It's about, I think, the points that David made and that others. And so once we can find that level of where those costs are, then is it about lowering the costs or securing the costs and making them viable? Because it's got to be viable for you. It's also got to be viable for the insurer, and finding where that line is critical. And that's where that I think that volume, if you like, that critical mass has got to be achieved. That we then say to the insurer, right, your investment can be balanced out with some industry support that will meet it. Having competition, I think, is really, really important, and I'm not suggesting we don't have it, but we've got to also be careful how we spread the load. If we spread our load amongst 2, 3, 4 insurers, our experience has been in the markets we deal with, there's just not the premium pool there to make it sustainable for the insurers. Hence, we have travelled the path we're doing. We're looking to that in now that, to mirror what we do with the equine industry, and then trying to make that viable. So, just to give you an idea of that, there is a plan in process. It's just a question of whether industry wants it, and that's not a decision that you guys can make here anyway.
And David, I'll jump in and answer your question in the chat there. And if everyone hasn't read it, is there proof that insurance costs are lowered, kept at the same level if program and venue accreditation is in place? And I think that the key thing about what an accreditation is it's showing a business is in compliance with a standard. And that standard is what the courts are going to use to measure a business against. Now, in our tort law, there's a thing called the inherent risk defence. So if a claim comes from the inherent risk of the activity, we've got a really good chance to defend that claim. And there's two in the New South Wales courts recently, being the Perisher one, where the ski instructor collided with the patron, and the other one was in a horse riding activity for the Wagga Show Society. Both of those claims were defended based on the inherent risk of the activity, because the businesses were able to demonstrate that they had all the risk controls in place, and it wasn't as a result of a failure in their operations, but the inherent risk. So we've seen in the trail riding space where we've got an accreditation system, those are the easiest renewals to do, and they've actually reached a stable level. Because now claims are being brought into check, because risk management is in check. The incidents are occurring less, and that's the outcome for the insurers, is to reduce the amount of claims, which then stops the premiums going up, because they can either bring the premiums up to cover the losses or reduce the losses. So those are the outcomes. And I think Bridie made a really good point there. Is there anything we can do to make it viable or just do it faster? I think the real thing is we all know what we need to do is have a system of accountability for our industry. And if I summed it down to one word, it would be accountability. You don't drive a truck on the road unless you've got a truck license. Our activities are risky. They do have poor quality outcomes if done incorrectly and poorly, but they have amazing positive outcomes if they're done properly as well. And I think that's what we're all here for, is to make sure those positive outcomes keep occurring, but without unnecessary negative outcomes occurring, that the participants get to have a safe, enjoyable experience. And I think that's the thing that we're looking at here. The positive outcomes of risk management are a safe, enjoyable experience, a better product that we can charge more for, more return customers. If they feel safe and enjoyable, they keep coming back over and over again and refer their friends. But also schools. I know a lot of schools are not coming to the outdoor education sector anymore because they don't have faith in it. So there's all of these tangible outcomes that we have if we have a strong quality risk management process in place, and that the next generations get to enjoy the things that we've all got to enjoy. And it also then means that our staff have better conditions to work in. They're not experience these negative things that all of us here have probably been to serious incidents. It's not a fun thing to do. And it makes you go, why am I even doing this? And there's all of these positive outcomes, including insurance viability for good quality risk management.
And needless to say, it wasn't a fluke that, 5 months ago, we started the AAAS audit program. through Outdoors New South Wales ACT. We saw this as an opportunity to get something happening, even though it's not accreditation. It's giving people that check on that risk management level to exactly what Greg said, provide better service, better opportunities, less risk for our industry. There's a lot of moving parts, and look, we've come to time. And just to go off, Glenn, I don't know whether Paul or Greg want to speak to Glenn's question there. I'm happy to, but I might leave it to our guest speakers to respond to if they wish.
I don't think it's the silver bullet. No, I think what we've talked about there is the accreditation is one tool that is certainly going to assist from the insurance, but it's about assurance, trying to provide assurance to all of the stakeholders, the property managers, the insurers, the participants, the staff. Unfortunately, a lot of the injuries and issues that are occurring are staff. So it's a matter of being holistic about it. The other thing, I don't think there is one particular silver bullet. I think, if we're going to talk about a silver bullet, it's actually industry, actually, exactly as Greg said, being accountable. So if accreditation is one component of that accountability, great, but I think we all know there's plenty of others.
Cool. All right, so the top tips as we leave today. One, review your systems, your management, your AAAS compliance, and look at an audit program or a third-party endorsed audit of what you're currently doing. The second thing is to make sure that the broker who you deal with is part of your business. They are not your annual checkpoint on renewals. They are part of your business and need to know what you're up to so that they can help navigate the challenges in this area. The third thing is you need to be part of your peak body discussions. And this is a great example because the power of voice here backs up what we're trying to do for the industry long term. If we don't build the power of voice here, we're not going to build the power of voice in our programs and our offerings for where we can improve the industry long term. We've got to get that voice a lot more solid. And as Paul said, even though we love competition, we need competition in a market to make sure it's viable, we've still got to come along for the same right in the same direction, or we're just not using our resources to the maximum possible opportunity. On that note, we are 2 minutes over time, and as you know, that's sacrilege in our world. So we're going to bid you farewell. If you want to hang around, please feel free to do so. But thank you for joining us for another Connect and Share. And if you want to join us for happy hour, 4 o'clock, link is on our website on the homepage.